Good morning. Good morning, everyone. I'm doing a mic check. Want to make sure you all can hear me. As you come in, thank you for coming. Welcome in, as well as I would like for you to please subscribe, like the live stream, share with others, let them know that we are here and we are going live today. I'll give it a few more minutes to allow a few others to come in, and then we will get started with our recap of what happened last night and our potential levels for this morning. For some reason, every day I have an issue with getting the chart to come up. Not really sure why that is. There we go. Hopefully everything is clear in your end, sound and visuals. Let's get started with our analysis. So let's start on, we can look here on the weekly to see what we have going on. So price is currently inside of a weekly fair value gap, a bullish fair value gap. We have we've come through it and tapped the top of another fair value gap on the weekly, but we rejected out of that. So that's showing bullish momentum. On the daily, we've been working this bearish daily fair value gap We came through it, and now we wicked into it. We have a body in it, but no bodies have closed past this. So it's looking like we're heading down on the daily, maybe toward these relative equal lows. The price can also push up and overtake that and go to the volume imbalances above. But because we do have a bearish breaker that is still being respected on the daily, um, we can still expect some lower prices. For the 4 hour, the order flow is still bearish in that we made a bearish breaker here. It's been respected and we're coming down. We did have a pullback into this daily fair value gap and we rejected away. We have another fair value gap here on the 4 hour. And on the 1 hour, this is our dealing range high and dealing range low. We're still in the middle of this, so price is still deciding what it wants to do. We just hit the mean threshold of this 1 hour fair value gap and looks like we are rejecting down. On the 15-minute, bearish price action. This is our dealing range high and low. And price is still coming down. This was just some consolidation and we came down. So it's very possible we could manipulate into this 15-minute fair value gap and push back up, or we can continue on down. As far as that 1 hour bullish breaker we were looking at, price has put some bodies past this level and we're back at the consolidation. So it looks like we kind of, if you're looking at it as a market maker sell model, this could be the original consolidation, and then we could go and take the low if we don't reject up and come back. And let's see what we've done so far overnight. So far we've taken the Asia low, took the Asia high in London, and we took the low. Well, we took the low first, then the high, and now we've just taken the previous session low uh, from yesterday. So we've taken previous day's low, which we had marked out here. Now we have the new day opening gap and the midnight open all clustered together. If price tends to want to trade back and forth in this, that could be a low probability trading. We have FOMC at 2 o'clock, and then at 10:30 we have crude oil, which is a medium impact news driver. So the last pool of liquidity that we took was the previous day low. And below that, we have clusters of session lows and other things, fair value gaps on the 1 hour, 4 hour, and things like that. We also have a 1 hour volume imbalance down there. So there are some targets to the downside. If we look at the 15-minute, you'll see we still have some more targets that we can reach. And the low here on the 15-minute is 987.75. So the goal today is to wait. What I'm going to be doing is waiting to see what price wants to do We have the low of London coming in at 220, around 220, 222. I don't like trading in the middle of a range, so I'm going to watch price action and see what we do at 9:30 and then during the macro and at 10 and 10:30. Because we have high impact news today, price could very well just stall around and wait for that, and that's permissible, so appropriately. Now, let's talk about risk because I like to review what happened before. I've already done the journaling from yesterday's loss, and what I did yesterday was to go back and really review my risk parameters because I went in with too many contracts too soon before I was able to truly know where the market wanted to go. The unicorn model did set up. We had taken a lot of sell side liquidity and, I got the entry function. However, it was very short lived and the price closed back into the range, which is not a good sign. Before I allowed price to maybe make another fair value gap to really show some signs of displacement, I went in with 5 more contracts and before that I flipped. I was short 2 contracts and then when price confirmed the breaker, actually a little before it did that, I flipped. Um, in my experience, me flipping my bias or flipping the trade direction um, doesn't always work out. You have to be able to accept that loss, reset, and figure out what price wants to do because it could just be another form of manipulation, which in that case it was. And then on the 5 minute, um, we didn't have a 5 minute close above that level. So if I had waited a little bit longer, I would have seen that price was going to be rejecting back down to the downside. So it's always important to review what went wrong. And then another thing I've been noticing about my trading pattern is me constantly moving or messing with my stop loss. And you have to be able to accept the risk. So I have created a grid for myself and my stop loss. Like I said, we have about 3 to 4 bullets. When you're trading prop, you only have about $1,200 in drawdown for your sidelined or you blow your account, depending on how much you are in drawdown. So currently we are about a little over $500 in drawdown, I believe. So we have to like $550. So we have to be conscious of that. So today we start off with another 3 to 4 bullets, and no trade can be more than $300 to $400 in loss. So that will determine how many contracts I can use. If I am confident in this trade, I will have to put my stop loss at my 3 failed stop loss PD array zone where price should not come. And according to how many handles or ticks that is, will determine how many contracts I have available to use. So at no point in time am I going over the $300 to $400 per trade maximum. And I hope that makes sense. Again, as you come in, please like the live stream, subscribe, and introduce yourself in the comments or say something, say good morning, talk to me, let me know you guys are out there and you're listening. I would just appreciate it. Good morning, Robin. Thank you and welcome. Glad you can make it back. So we've done the analysis and now we're just watching price. I like to get on stream. I like to get to my desk early enough to look at the market for myself and see what has happened overnight and try to get a read on the day so far. So I've put on the screen for you guys some levels that we're looking at. Again, the new day opening gap and the midnight open are clustered within this 1 hour fair value gap, consequent encroachment, and we have a session high above. We have London low below. And then after that, we have some more session highs. Session lows. We have 4 hour fair value gap, consequent encroachments. So we have a few things that we're looking at. There are some targets to the downside. And I'm happy to answer any questions, so just put them in the chat. I'll get to them as I see them. Good morning, Jazz. So, Robin, the way that I did it, and I got the Discord created. I just need to add content, and I will be doing that. I'll be working on that this week and or this weekend. The way that it is 5 contracts for 200 ticks is $500. That's the take profit. What you have to look at is what are you risking? So if my stop loss requires me, let's say for instance, I wanted to take a short here. My stop loss with the 3 PD array rule, that would be um, basically my stop loss would need to be around here. That's 179 ticks, right? Now I may be aiming for 200, 200, if I want $500. But let's look at this. And this is something that um, when you're moving on a fly and you're trying to get in a trade, you want to have this stuff kind of already mapped out. What if part? It's always if this, then that. So my thing is if I'm going to go short once we create this confirm this order block on this bullish candle here, my stop loss would need to be above the lowest, below, I'm sorry, keep moving stuff out the way, above this high. So let's say we do 140 around that where, just to give it some breathing room, 138. And we're going to use 5 contracts. So that's $362.50 worth of risk. So that's within my $300 to $400. So I'm okay. Now I can comfortably use 5 micros. However, if my stop loss needs to be way up here past the high of the 1 hour fair value gap, now that's $885. I don't have that. So say for instance, if I had to have it here at 351 micros, then I would only be able to reasonably use 2 micros because that would give me the 354 or could probably push it out to, let's say, 400. So now I have this much space available. So you want to anchor your risk where you're within your daily loss limit. And yes, that's how I do it. Well, that's how I'm doing it now. That's my new plan. I had to readjust some things because, again, with prop firm, you cannot sit in a lot of drawdown. It counts against you. And if you're terribly wrong, if you have too many contracts on, like I did yesterday, I went in too hot, too fast. It it bit me, and I lost. That last trade was almost a $800 loss, which shouldn't have happened. I should have counted the cost prior to that, but I didn't. And so that's where I went wrong. So you learn from your mistakes and you adjust your loss accordingly. Where does my stop loss need to be comfortably so it can breathe and we can potentially hit our target before price comes back? Now, the other thing that I am struggling with or working on is once I take my first profit, I'm in profit. That means I made money on this trade. Am I going to allow price to now come back to my entry and possibly take me out, eating up all the, you know, gains that I made? That to me doesn't make sense. And so I struggle with that because a lot of times I'll move my stop loss and profit, right? After I get money, my stop loss is going right a little bit before break even to cover any fees. And the last couple of, a lot of times I've had price, come down, hit my TP, but I'm aiming for this. However, it'll come back up here, not stop me out, but it'll come within that range because it's permitted to do that because this is a order block, and then it'll go down. But I'm out the trade. And once you're out the trade, you're a little bit more hesitant to get back in because now you don't know if it's going to come down and fake you out again and then go back up, because price likes to do things like that. So that's the other part I'm going to have to think about. But if I've made my $500, I'm okay with, breaking even with a little profit on that runner or at least, getting half of it. If it moved down 400 ticks, I don't want to see it come all the way up here. I'll just probably break even at the same level as my first TP or something like that. And it all depends on what the market structure is giving you. But when you have massive candles that have come down 100 handles, that retracement back up could be 50 handles. That's a lot of money. So you have to make a decision. Do you want to give back any profit? You want to let it play out? Or you just want to, take your winnings and reset and try another setup? So I hope that answered the question of that. If you guys could let me know if the sound and the visuals are okay for you on your end. I'm adjusting my screen to HD and it looks pretty clear. So we'll see. Okay, great. Thank you, Robin. And good morning and welcome to all of you guys who are watching. So again, we're just in a range. This is London high, London low. We've already taken the mean threshold of the London session range, the equilibrium. So we're just in the middle. Our dealing range high is here. And this is our dealing range low. So we're just inching up. I see a lot of long wicks. So this could be another day of high resistance liquidity. But 9:30, which is in 5 minutes, we should see some type of movement into something. Price may very well want to take the midnight open and a new day opening gap, take the London high, and either we'll create breakers and come back down, or we'll confirm order blocks and continue higher. Good morning, Mark. Welcome. Thank you for joining us. Be sure to like the live stream if you haven't already. I'm just going to keep reminding you guys because it's easy to forget. You come in and you're like locked in on the charts, but it helps the live stream. It helps other people find us and can join this challenge. So, again, we are about $550 in drawdown currently. So our goal today is to get out of drawdown, get back into the green, and hopefully we can get a really good setup that has some great runners to get us over our profit threshold. I think the highest that this account has been in profit was 600 and some odd dollars. I want to say maybe 650. So I want to see if we can get to at least $1,000. But no pressure. We're going to just follow our trading plan and stay in control of ourselves so that we don't mess up. And you're going to make mistakes some days. It happens. Let it go. Because when you bring that extra added pressure and stress to another session, it really just messes with your psychology. You are the only one who can control you. You're the only one pressing the buttons. So no matter what you see me do, you do what you know and feel that you have to do as a independent thinker and trader. Just as a reminder, I'll be speaking as I have something to say. But if you have any questions or concerns, or if there's anything going on your end that I may not be aware of as it relates to the stream, please just type it in the chat. We have 30 seconds until the 9:30 open. So far, our price is reaching back into a bullish order block on the 1 minute. This was a bullish order block. It reached into that. We have a new day opening gap, midnight open, and London high here, London low here. We've already taken the previous day low, and we've created bullish order block on the 1 minute. I'm sorry, a bullish breaker. Sometimes price would like to revisit that to bounce higher, or we could flip down and go lower. I'm also watching the 5 minute to see if we confirm a 5 minute bearish order block. If we flip this, zoom in a little bit more so we can see a little clearer. So after 9:30, you want to give price an opportunity to figure out what it wants to do. Typically during the macro, price will start moving some sort of way. And then at 10 o'clock, you get a confirmation of what price really wants to do. Okay, so it looks like we may be just going ahead and pressing up to the new day opening gap and midnight open. We're just in a range basically here. So I would love to see us break out of this range, either to the upside or the downside. This is just back and forth action. I'm also looking at dollar and ES. Dollar has not taken its London high. It tapped into the consequent encroachment of a 1 hour bullish fair value gap and pushed upwards. So that could send our indices coming down. No definitive action has really happened just yet. Reminder, we do have medium impact news at 10:30. I believe it's crude oil. And welcome to our new subscribers. Truly appreciate you guys for coming by, liking the stream, as well as sharing with other traders who may want to learn more, have some company, or just be entertained. I appreciate you all. Thank you again for all of you guys who support this channel. So it looks like we're going to be creating a 5-minute bearish order block at the close of this 5-minute candle. So we just want some confirmation because, again, we have news and we have a lot of manipulation that could take place. On the 1 minute, we still have not confirmed a order block in either direction. And on the 5-minute, looks like it's struggling to do so. Good morning, Rodrigo. Thank you for coming. Welcome to the stream. If you could do me a favor and like the stream as you come in, I would greatly appreciate it. Share it with some other people. Let's try to get this stream packed. So now, looking at the 5-minute, we are inside of, after we took the New York session low or the previous day low, we didn't confirm a solid 5-minute bullish breaker, but we do have a swing failure pattern breaker that price just tapped into. And I'll show you what that is. This would be my 5-minute bullish breaker. We just got shallow bodies and wicks. But this swing here, let me zoom in a little bit more for you. This swing here, I'll often use as my swing failure pattern breaker, call it an SFP breaker. Not sure if it's also called a mitigation block or anything like. I don't think it is. Not really sure. I just call it what I call it. And so we had a swing failure where we made a high and a low that didn't take this low, and we closed above that. So this would be something I would sometimes take a entry off of into the internal range liquidity. And as you notice, we just tapped that again, and it seems like we're pushing up. It's not enough confirmation for me to take a trade because of time, number one. And then two, I want to break out of this range before I engage. Or even if we do come back into the mean threshold of this 1 hour fair value gap and start to create some bearish breakers that could possibly potentially put on a trade with that. We have our macro coming up in about 9 minutes. So I want to see what manipulation will occur during that time. So we have a high, low, a higher high, and a lower low. You could say that we created a 1-minute inter-range breaker block. That's what I call it. It's a breaker block that happened in between. I'm sorry, a breaker block that occurred or formed without taking any major liquidity. That should be red. This is the reason why you can't just trade every breaker block that you see. You probably could on like the sub 1 minute time frame, but I typically don't do that. Thank you, Rodrigo. I appreciate that. Thank you so much. Okay, so since opening up at 9:30, we've basically just been in this range. We haven't taken the new day opening gap or midnight open. We really haven't done much of anything so far. So it looks like the bodies respected the mean threshold of this fair value gap. You didn't get a body close below it to invalidate the 15-minute fair value gap. The regular trading hours gap is here. And it is now 9:50. It's time for our 9:50 to 10:10 macro. So let's see what price wants to do. So for dollar, yes, as well as the NASDAQ, the London high and low have not been taken as of now. Yes, and NQ has taken its previous session low or previous day low, which was the low of the New York session yesterday. Well, good morning to those of you all who are just joined us. Welcome to the live stream. Glad you could make it here today. If you could be so kind as to leave a like and subscribe to the channel. Also share with others so that they can join us and we can have the algorithm push this out to other traders who may want to learn a little bit or just have some company. So it looks like we're pushing down to this previous day low and back into the 1 minute bullish breaker that sent us up. One moment. Okay. So now we've tapped into this swing failure pattern breaker. I'm gonna find out the exact name of this. This is what I call it. 'Cause I believe mitigation blocks are as you're coming down and you're making fair value gaps, and then price mitigates that fair value gap and continue down. Um, that's my understanding of it. But we did make a breaker down here. So if we're looking at it from a market maker sell and buy model, we had the sell side, and now this would be the buy side. So the London high would be our target. We're still kind of respecting this 15-minute fair value gap. And we're just basically in this holding pattern. And this is what price could do most of the session. We do have 10 o'clock open in 4 minutes. And then after that, we'll complete the macro and also have 10:30 medium impact news. So mitigation blocks are the failure swings. So this would be considered the mitigation block, Robin. Thought that was the case. I just said it's a swing failure breaker. Swing failure pattern, mitigation block, hey, whatever makes sense to you, because a breaker block is nothing more than a failed order block. Right here, you see, we made the low high, a higher low, and a higher high. So this low did not take out that low. If this low had taken out the low, then this would be our bullish breaker, but it didn't. Our bullish breaker is up here. Actually, if I zoom in a little bit more, no, our bullish breaker is where I identified it right here. I use this candle. So yes, okay, thank you. That's what I thought. I just didn't want to, I wasn't 100% sure. So while we wait for price to do anything, have you guys been listening to ICT's new 2025 lectures? I fell asleep on the first one toward the end. I got most of it, and then I couldn't even get past the first few minutes yesterday because I was just so tired. I'm gonna go back and do it. But there are people who are creating like notes for his lectures, and if you're somebody who really just can't sit through it or listen, um, you could find them to their notes helpful. I'm gonna review it. I'm not really interested in learning. I won't say not interested in learning anything else or new entry models, but what I do want to do is hone in on what I'm already doing and what I know so that I can, you know, enhance my skill set, especially on days like today when price is literally was creating barcodes. I do too, Robin. Breaker blocks are my number one, and then mitigation blocks are number two as far as entries. And then order block continuation entries are third, which I am building my confidence in day by day. And we have 10 o'clock open in a few seconds. Yes, I'm looking at the 1 and 5 minute at the same time, and you're definitely right. So now let's see what happens at 10 o'clock. 9:30 open really didn't produce nothing. A shallow, it confirmed this order block. So now let's see if price would like to break out of this range that we've been in. since 8, a little bit after 8. I want to see how we react as we approach this the CE of this 1 minute, I'm sorry, 1 hour fair value gap. Do we continue to close it out, or do we get resistance and then start making bearish breakers to the downside? On the 5 minute, the 6:55 a.m. candle is a bullish breaker. It was the highest up close candle before the liquidity run down into the previous day low. So if you get a body above that, that's a bullish breaker. However, it would occur right here as you hit the internal range liquidity of a 1 hour fair value gap. So you have to be careful because anytime you hit a higher time frame level of liquidity, that kind of can reset uh, your pattern. It could trigger a reversal because you go from external range liquidity to internal range liquidity, external, internal, and so forth and so on. I'm also going to make a reminder for us to check the, oh, let's do it now, actually. Let's look at the mean threshold of the previous hour's candle. That will be our 9 o'clock candle to see if price may want to rebalance that. And it looks like it probably already did. We opened, hit the mean threshold of the previous hour candle, and now we're pushing up. Our new day opening gap has been filled, and we tapped the midnight open as well as we're back into this 1 hour consequent encroachment bearish fair value gap. So for me, if we get a strong close below this low, this will be our bearish breaker on the 1 minute. So the 1 and 5 minute bearish breakers are currently in the same location. Now just above this area is our 5 minute bearish breaker that sent price down after we swept the Asia high here. And then this will be our 1 minute bearish breaker in this zone. So price could hit this area and bounce back down, or we could continue going higher. Yeah, clear, seek, and destroy profile. Anytime we are just bouncing in between the new day opening gap and the midnight open, and we're really not doing anything, we can take that mean threshold off because we've done with that. Uh, it's low probability. I really want to see us break out of this range. So we're currently inside the midpoint of a 1 hour fair value gap. And we have 6 more minutes for this macro. So during the macro, what do? We balance the opening range gap from last night until now, and we hit the midnight open. We're right back at the 8:30 open and slightly above the 9:30 open and 10 o'clock. The macro will be ending in 5 minutes, and then we have medium impact news at 10:30. And I'm wondering, did we not get a? This was our first presented fair value gap. I believe it's on a 9:34 candle. Correct me if I'm wrong if you see it on a different candle. I believe that's our first presented fair value gap. So far we have a 30-second bearish breaker block coming out of that mean threshold of the 1 hour fair value gap. And we created another order block. If we get a close below this, we will, this has been really just inverting and playing around inside of the first presented fair value gap. This here is a 30-second bearish breaker, high, low, higher, high. And we just made a low, confirm this bearish order block, and price may want to go ahead and complete the market maker sell model on this end, tapping back into the bullish breaker. And these are just our potential bearish breakers if we get the close below here on the 5 minute. I like to have those mapped out so I can start formulating a trade idea if in fact I'm going to engage that. But I don't like trading in the middle of a range, so I would prefer us to go ahead and take out some higher time frame liquidity. We did hit the midpoint of this 1 hour fair value gap. So that would count for me. But going from internal to external range liquidity is a little more risky than external to internal, in my opinion. When the macro has ended, we are now back in the mean threshold of the New York range. So our 30-second bearish breaker block looks like it's going to be delivering. But I don't trust this at all. So you do with that what you will. I'm going to be a little bit more patient because today we need A plus setups, high probability setups so that we can recover our loss from yesterday. So in this case here, if I was to take this breaker, my stop would need to be at least 400 ticks above the entry. And that means I would only be able to use 2 micros. That's a lot. And if you look at it, we've just swept that low. We could push back up into the fair value gap. We want to wait for an entry there. It reduces the risk, but we don't have a confirmed 1 minute bearish breaker yet. On a 30-second. Yeah, we're not getting any entries. This is our 1 minute bearish breaker here. Let's sell that in that order block. We have London low here. Below that, we have another session low as well as a 1 and 4 hour um, consequent encroachment of a fair value gap. No, it would be a um, breaker block that formed after taking internal range liquidity, which was the 1 hour fair value gap. When we closed that out, looks like, let's go back to the 1 minute. We have a bearish order block here. Price is permitted to come back into this area. And looking on the 5 minute, we also have a 5 minute bearish breaker. It has been confirmed on the last candle. Yes, it's near its London low. And dollar is pushing out of a bullish fair value gap on the 1 hour. I'll zoom in a little more so we can see. Just as a reminder, we have 10:30 medium impact news coming up. So if price wants to do this all day, it is possible that it could just go from one end of this range back and forth through the midpoint and things like that. So if that's what we're going to do, then we can only see, here's our order block. We can only just let it do what it wants to do. And that'll be what it'll do until possibly this afternoon. Want to see us start taking some highs and lows though. So I'm keeping my risk small. This is the bearish breaker out of the 1 hour fair value gap. This is our 15-minute low. So London took its session low, and we came within a few moments of that. So we have SMT, where ES took its session low and NQ did not. Just want to see what happens here. We also have a 5-minute bearish fair value gap. I want to see how price is going to react at that level. Let's see if we get rejection out of here. Our 1-minute breaker didn't really deliver. Let's see where we confirmed it here. This candle, we closed and then we went back into the range. We're at this volume imbalance. And then we have this, which would be our line in the sand. Because if we close above this, then we're going to probably go back into this volume imbalance, these volume imbalances up here. We're just basically still bouncing in between this range. So let's see if ANQ would like to take its London low. We've created two bullish 1-minute fair value gaps. So we would have to definitely invert both of those to get back down here. And that's something price may not want to do. So I'm just watching this here. When we're back inside this bearish order block, you want to see price reject away from it and come down if we're going to continue on to the downside. And these are not optimal trading conditions. We have news in about 3 minutes. So that could send price down. It could also shoot price up. So we have to see what type of manipulation we're going to get. But I'm trusting this bearish breaker here, which is my entry function out of this 1-hour fair value gap. I want to see if we're going to take this session low and go lower. I have 2 minutes. Let's look at the 1 hour. So we rejected out of this. We didn't take the low of this 1 hour candle, and we have some consolidation down here. So price could be done down here. It's very possible. Or we can go ahead and try to hit the 1 hour fair value gap down in this level. We've inverted one bullish fair value gap on a 1 minute. Let's see if we're going to do that to this one. Um, Sometimes, I mean, when it says medium impact, sometimes it depends on what it is. It'll have an effect, and then sometimes not. I don't put a lot of stock into it. The red folder news I definitely look at, but any medium and high impact news drivers, I mark them out on my chart and I, take a look at it. Yes, it's pushing back down toward its London low. And there's another session low right below that. So we have London low and a previous session low here. And then we have the new day opening gap in this area, new week opening gap. We have previous one. So this is the news. I really don't want to see price come back above this area. Each news driver does something different on a different day. Sometimes I've seen crude oil make a big move on NQ. Not sure why. But again, you always have that manual manipulation, and they can do whatever they want and use any driver to do it. This is what we classify as high resistance runs. Um, Instead of price go ahead and taking the session low, it had made a deep retracement back into an order block, and it can come back down and do the same thing, and it could just really do that all session. So it's like, do you really want to sit through that? We're making shallow runs, shallow breakers, swing failure patterns. We're not taking the mean threshold of this bullish fair value gap, and price is pushing up here. I'm gonna, instead of risking the 400, I think I want to just risk 300, maybe 305, 350. I don't really want to risk the entire 400. Price failed to get to the mean threshold of this. If we're really heavy, it shouldn't come back there. It's permissible to do so. So just don't like that. Not doing much here. And this is an order block. We've tapped back into it, but we're not overtaking this bullish fair value gap. We'll look at 30-second. We're just consolidating in this zone right here. Our next macro isn't until 10:50. Price has let me show you. We have a 5-minute fair value gap. Price with the mean threshold of that. It's already has mitigated this. So if we were going to go down, it should not want to come back into this zone again. But we also have a volume imbalance, which you could, but I'm not gonna I don't want to play around with NQ today. So I'll leave my stop loss there and we'll just find a better entry or follow my first line and just get the 1 minute. I'm sorry, the extremity order. Okay, so that's one of our bullets at $300. ES made, we had SMT with ES. This would be considered our bullish breaker on the 1 minute. Price has come back to it. And now we could be pushing up for the London highs. Let's just see what happens. Hit this volume imbalance. And also, remember I pointed out that trades coming out of the internal liquidity, trying to get to the external liquidity, are a little more trickier than external to internal. But we didn't take our session low where it, yes, did. There's another session low below that though. So now I'm going to point out, see, the 5 minute bullish breaker. 5 minute bullish breaker wouldn't be until here. And we're back in that first presented fair value gap. We have a bullish order block here. Also, we're approaching the midnight open. Honestly, if you're not going to be calm, what else you going to do? I mean, it's not like we can control price. All we can do is follow what it's giving us. And this is, like Rodrigo had pointed out, this is just a seek and destroy profile. Best short was when we closed below this candle and we reached into this. That would have given us a good amount. That would have, if we could have got a perfect entry. My entry was a little late. I caught myself waiting for price to come back up into the order block, but my fill was ended up being in this area here, and it was more short lived. But I'm working on not cutting my trades and just letting things play out because 9 times out of 10, when I start moving stuff around, my analysis is correct, but I get out too early. And then in this case, it just didn't work out. And it's very well possible that price could come back down. Right now, we're just ranging. It's just come back into this bullish order block. But I don't really like taking trades in the range. So I think I'll just stick with that. Sometimes they work out the bearish fair value gap about the 1 minute. It's not a bad move. It did produce something. I just didn't have the best feel. I didn't get in at the appropriate time or get out, actually. I was expecting it to take that London low, and it didn't. Oh, I know. I was using this candle as my bearish breaker. I didn't use this. So this is where I got in at. And I didn't have that much room in profit. So now we've taken this volume imbalance. We're inside of the order block. I'm sorry, fair value gap on the 5 minutes. We are still rejecting. We didn't get a body past the mean threshold, but we are pushing up out of that 5 minute order block. I'm sorry, fair value gap. Keep getting those confused. 1 second. Sorry. My apologies. I am still healing from this viral or whatever is going on. So you see these deep retracements? Those are high resistance liquidity signatures. We are back into this bullish order block. If we're going to go with SMT, then we would treat this as our bullish breaker up here. This could be our mitigation block entry that could send us higher. So let's see if we invert this fair value gap. Looking on a 5 minute, we are still inside that 5 minute bearish fair value gap. And it's possible we may not get any real movement until the lunch macro or either after the news finish. We have, for the New York session, we have only, the range is only 176 handles, and most of that has been in this area here. So we have a high, low, higher high. If we close below that, that would be an inter-range breaker. That would be something I would consider as an inter-range breaker. And that could send us down into these lows if we're going there. But currently, we're just still in the middle, still around this previous day low. And notice that we rejected out of this 1 minute bullish breaker that sent price up. If we don't get anything good during the morning session, I'll come back for the PM session. I'll set some alarms and alerts for when price get. Yeah, I'll be live. I'll go live. I'll send out the notification um, because I really I want to trade today. I want a good one, but I don't want this here is not working for me. I don't like trading in the middle of ranges. I like to already be in my trade. So while we wait for price to do anything, we had SMT at this low, which meant that price didn't need to take the session low. I've seen it where ES will take their low and Q won't, and then later in Q will go ahead and take it. So we had SMT. Out of this, we created a mitigation block or swing failure pattern or interrange breaker, whatever you want to call it. And price went up, came back down into this fair value gap. That would have been your best entry. And then we could have hit our 50 handle target from there. We're currently inside of this order block. I'll map that out for you. It's a bullish order block. And price has it confirmed it. It's failing to go beneath the mean threshold of this. And this is a good entry to go long if you believe that midnight open is a target or the London high. My stop loss would need to be below the order block. So that would be maybe like $150, $160 worth of risk. Looking at ES, it is failing to get above this 5-minute bearish fair value gap. So to me, on the 5-minute price is still heavy. And so I just won't engage. You can always formulate trades up and down based off of different things. We have a swing failure pattern here. This high failed to take this high. So now it may want to attack this low and then these lows. So I'm pointing these things out because you can look at the market in different ways and it all can make sense in the grand scheme of things. And I don't really want to chase price either because we're in high resistance area and there's lots of manipulation. We have 3 minutes and two until the 10:50 to 11:10 macro. So I'll give the stream until 11:30 to see if we can break out of this range. And if not, then we'll come back for the PM session. PM session starts at 1:30. I'll come back at 1. I'll be on a little before 1, but I like to watch the first 30 minutes and then we'll have the 1:30 open, 2 o'clock high impact news, and then we can see what we can get from there. Maybe price will show its hand. But on our first trade, we lost 328. So that was our first bullet. Excuse me. I'm trying not to make as much noise in you guys' ear as possible. My throat, nose, coughing is unbearable. So we have 2 more bullets at, about $400 max. So we're gonna use those, put them to good use. So if I had used this candle as my bearish breaker or even this low, um, we would have met our target, but I used this low because it made the most sense to me. And then price came back into it, but it didn't deliver exactly. I should have pushed my loss up, but again, I'm trying not to mess with my trades. I really just want to leave things alone and accept the risk. So I'm working on that, the take profit part. So I don't know. This is what we're doing. This is all classic signs of low resistance, liquidity, low probability. But we'll stay on to 11:30. And we'll just watch. If you guys have any questions or if you're seeing something on your end that you want to share with the group, feel free to put it in a chat. If there's something you want me to look at, we can also do that. I'm going to make a reminder to check our 1 hour candle at 10:58. How fun is this, right? So ES and NQ are back in its range. I mean, back in the midpoint of the range. It's just hovering around the equilibrium. So we're in a very much so uh, ranging market. Okay, so this is the mean threshold of the previous hour's candle. And we're just ranging in between the first presented fair value gap, the new day opening gap, midnight open price. This is our range. So, excuse me, if you all are wondering what low probability looks like, this is what it looks like. We have about 15 seconds until we have our 11 o'clock candle open. Yes, definitely. And that's what I was saying in the beginning. Um, the 30-second breaker block that I pointed out after we hit the 1 hour fair value gap here, that was our best entry short, I would say. Highest probability entry short because the stop loss was very minimal and we would have got at least 120 handles. But also, this was a 10 o'clock open. And at 10 o'clock, so on the 30-second, what we could say, what happened after 10 o'clock, we confirmed we had high, low, higher, high, lower, low. This was a breaker. I would have used that one. But if you wanted to be safe, you could use this one. We got a close below here. This up close candle would have been our entry on the 30-second, and we still would have gotten more than our 50 handles. So everything works and it can work out. It's just, timing. If you can get in at a good price and minimize your risk, that's great. I was not willing to lose more than $400 on that trade. So once price started pushing up, um, I let it go. And it didn't come back to my entry yet. So we actually created a mitigation block here and prices tap into that and moved up. But you don't know that that's what price is going to do. And so when you're not sure, you try not to engage. If you have an A plus setup, you just want to stick with that. And you could have a B minus setup, but if you're going to take that, you want to lower your risk. So using 2 micros was the best decision I could make. So if by 11:30 we haven't taken either of these ranges, I've already set the alarms to go off to let me know. And we'll come back for the afternoon session. I'll come back and have a pretty light day today, so I'll come back and we'll see what we can catch then. And I'm gonna put on the chart for you guys a new week opening gap that looks like we tapped into it last week, but it's still valid. I don't know, you guys, how much um how much I want to say what's your thought about the new week opening gaps? The ones that I see are nestled in between like this new week opening gap here. These are 1 hour fair value gaps, 4 hour fair value gaps, session lows. So there's other points of liquidity in these areas. And I want to know, how do you guys use the new week opening gaps? Do you find that to be something that draws your attention to price and it's important to you to know where they are or not? Because we have some up here in this area, but your chart could get really cluttered. So I have an indicator that I look at on my end. Save 5. Yes. So yeah, I have 5. I have actually my indicator, I think it saved like 10 of them because they can um, form some resistance. And now that you mention it, let's see here. See on my 1 minute chart, it didn't show me, but I'm going to show you guys. Let's see. Let me show you this. Okay. I'm going to show you this. See, on the 5 minute, if I turn that indicator on, where price stopped at was another new week opening gap. Let me zoom in. Bodies closed right outside of it, wick down, and went up. In addition, we had SMT, wicked it again, and then went up. So that's pretty cool to see. I missed that initially, but the SMT probably should have been enough. Um, SMT is another thing that I'm not as confident or sure of. I'll have to really do more back testing and be more conscientious of it. But a breaker, I know those, and I trust the ones that come out of higher time frame liquidity sweeps. Oh, yes. Yeah, definitely. For some reason, the new day opening gap on the 1 minute didn't show on my chart. It only shows on the 5 minute. So see, we came back to the mean threshold of the previous hour candle. So we can take that off. But I'm not interested in anything until we take a session low or some other higher time frame liquidity zone. Yeah, mine I have them on a 1 minute. I just don't have that one where we made the mitigation block at 10:22. I don't have that one on my chart. 5 minute chart looks ugly. So we have 3 more minutes to the macro. Price is coming back down toward this 1 minute bullish breaker that sent price up from the liquidity sweep during the London session. Are you guys able to see the chart okay? Do you need me to zoom in for you, or is this good? Sometimes you don't want to be too zoomed in because you can't see pertinent things to the left that you may need to, but I want to make it as comfortable for you guys. Yeah, what is this? Okay, thanks, Robin. I will leave it like this. So we have our range high, our range low, and we're just right in the equilibrium. This is signatures of low probability conditions, high resistance runs. It's gonna go somewhere, but it's not gonna go there right now. It's not gonna move as fast as you would like. And our best run was actually after 10 o'clock. Price just shot down, but did not give a entry. It was really only one up close candle. And I guess we could have, looking at this confirmed a bearish order block. Price did come into it. So this would have been our best entry. And I think I showed you that on the 30-second. This would be the area of the bearish breaker. So again, I tell you guys at 9:30, you want to watch and see what happened at 9:30. 9:30, we manipulated up. We didn't take this high. We made this is all relatively equal highs. Came down right after 10. We swept this mean threshold of the fair value gap as well as wiped out all these relatively equal highs. created a 30-second bearish breaker. This was been our entry, and we could have taken that short. I was playing it safe and trying to get below this low, and we did. Came up, came back down. My entry wasn't until about here. So the profit was short-lived. So we'll see what happens in the next 20 minutes. 11:10 macro is over. And we'll take a break at 11:30. I'll come back at 1 and we can see what the afternoon session brings if we can't seem to do anything here. If price happens to break out of these London range high or low before 1 o'clock and I take a trade, I will record it. Consecutive candle legs. Are you talking about, let's see here. This is our 5 minute. Are you talking about like a fib from say here to here? Is that what you mean? Let me know what you mean. Thank you, latest trends. You know what? I appreciate that, but I absolutely hate hearing my voice when I replay these live streams. I'm like, oh my God, why do you sound like that? But I appreciate that. Thank you so much. I'm actually I have caught some type of cold or virus, and so I'm on antibiotics. So my voice and I just feel nasally. I feel deep. So I can't wait till I'm back to 100%. But thank you for joining. Um, and let's see if YouTube, well, I don't know. But thank you for joining. Thank you for subscribing. And I would appreciate it if those who are just tuning in, if you are just joining us, if you could leave a like on the stream, subscribe, share with your other people. I am doing this challenge live as a personal challenge, but I am doing it for accountability. And I think it's a good learning um, process. So I appreciate you all for tuning in and thank you. TT, just on the bodies of the last consecutive 5 minute, the two red ones versus the two green ones. Okay, one moment. Oh, like this? No, I don't. If it's an order block, yes. Like if we got to close above this, this would become a bullish order block. But I would put the order block tool or my measurement tool. Let's see. I would measure this out as my order block so that I can know where price is coming. And as you can see, price is failing to put a body above these bearish order block candles. Okay, yeah. And so that's what I was pointing out. I don't know if you were in the stream, like you could read you could read this price action so many different ways. Every trader is going to have their way they see the market. Um, and so where I may see, I'm just looking for my breaker and confirmations and things like that. I was just pointing out on the 1 minute that I was looking to go short. This was our target. However, price made an SMT with ES, which meant that NQ didn't need to take below this time. We created a mitigation block or, interrange breaker block, whatever you want to call it, swing failure pattern, whatever, closed above that with a fair value gap. this could have been a long. Then you come up into this 30-second bearish breaker that we identified and rejected out of it. That could have been a short, So you can definitely trade back and forth. But the main thing is what makes sense to you. You have to find a trading style and model that resonates with you, something that you can see it and you know what's happening at that moment. And you stick with that. That becomes your A plus setup. Now, if you want to experiment with some other entry models, there's nothing wrong with that. Just reduce your risk. But before you use your real money, you will want to back test and live test and demo to build your confidence in that. And I try not to tell people, what they should do. Every trader is different. I'm going to take this new day opening gap off because we're done with that. And it's right by the midnight open. So, same thing. We've already taken a previous day low, nestled with the bullish breaker. So, I try to I can't make people see what I see. All I can do is explain what I'm seeing and give my rationale for how it works. Honestly, the unicorn model didn't click for me until I was watching one of Ash Trade's live streams and he was talking about it. And that particular day, because I had watched him time and time before, but this particular day, something clicked. And I was like, okay, I get it now. And I started back testing and I saw it each and every time. And 9 times out of 10, it worked. Anytime you come into a higher time frame, like 1 hour or above liquidity pool, if you create a breaker block, that breaker block will deliver something. Now, what it's going to deliver, I don't know. I was hoping it would deliver to the London low, but we didn't make it there. We got caught up at this new week opening gap and we rejected out of it. So, again, risk management is always the key. Don't be afraid to take trades, just manage your risk. How much can I lose? Divide that up into 3 or 4 or 5, depending on how much you're willing to risk for the entire day. And then formulate your trades off of that, making sure that your stop loss will keep you in your loss limits. Excuse me. Currently, we're just consolidating on the 5 minute. The 15 minute is not looking any better. So I believe at this moment that they're holding price for the news driver. We tried one trade, it didn't work out. So we have 2 more bullets, and depending on that, hopefully we can get at least another A plus setup with a nice runner. I would love that. But you pay yourself first, and then you hold out for any extra. And latest trends, if you don't mind, can you tell us how long you've been trading and what's your trading style or model? And this goes for anyone else if you would like to share that information. I mean, we really ain't doing much, so we could have a little chat. Helps the time go by. We have about 10 minutes before 11:30, but I don't know if we're gonna make it up to the London high or low in that time. Okay. And is that something you still use now, or have you switched to it? Okay, so a mixture of ICT strategies. Yes. Okay. That's great. As long as you're finding profitability, that's all that really matters. Sticking to your rules and being disciplined and patient is those three things are the main thing. Okay. Yeah. NCT strategies definitely, I mean, his concepts do work. Once you have an understanding of them, they work. This was a pretty boring session. So on Tuesdays, after Monday's trading session, Tuesday and Wednesday, I try to look at the weekly profile. And on the 1 hour, we look at the weekly profile as far as the candle is concerned. We have Monday high and Wednesday is making the low so far. So we had open high and we're just coming on down. If we're bearish, and if the news delivers today, I would like to see this 1 hour low taken from where we are currently. That could give us about 377 handles, which is a nice move. We don't know what's going to happen because price may want to manipulate up and then come down, or we may just flip back up because we have a low, high, lower low. If we close above these up close candles, then that will be a bullish breaker that can take us into this 4 hour, 1 hour, all the way up, you know. So when it comes to daily bias, again, I just watch what price is telling us because anything can happen. We rejected out of this, but that doesn't mean at some point in time we won't overtake it. It's not a guarantee price is going to go lower. It's not a guarantee price is going to go higher. We won't know until it actually confirms using the signatures in price. So we just watch candle closes, rejections, and things of that nature. And you formulate your trades on the lower time frame based off of the order flow and changes in the state of delivery. Oh, so okay, you weren't here. Latest trends. I was asking about S&T, like how many of you guys use that and how important it is to you. So let me point this out. We had S&T with ES. ES took London low, and we didn't. Then we created a mitigation block and came back into this fair value gap. This would have been a perfect entry. However, I was still looking for price to go lower because we hadn't taken the low. Now I've seen price have S&T with ES, but still come back and take that low. For you, in this scenario, once you saw that S&T, would you have been more confident to go ahead and go long? And do you use SMT on like highs and lows? Because I know someone who uses SMT on candles, like every little candle, and I haven't gotten that deep with it. So I'm still learning that. Excuse me. Believe I'm going to put S&T on my list of things I want to explore and learn more about. I recognize them where they are, but there's also this trader by the name of JME. He does some really good analysis and things like that. And he talks a lot about S&T, but not just S&T with higher high and higher low, but S&T with time. So say for instance, yes took the London low at 9:30 and in Q took the London low at 9:40 that would be an SMT, but I'm not sure how that works or what happens after that. I don't know if I have to join a mentorship to figure that out, but at 11 o'clock, we did create a 1 hour. Oh, no, I'm sorry. We didn't. I'm on the wrong chart. We're still, we're still in this 1 hour fair value gap. After taking it, the mean threshold, um, I know it's consequent encroachment, but you know what? When you've been talking a lot, you just want to say what you need to say as easily, as quickly as possible. So we took the mean threshold or the 50% midpoint. Consequent encroachment is a lot of syllables. So yeah, I'm feeling silly today. I don't know what's going on. Maybe I need breakfast. Okay, let me get my session low back in place. All right. Trader Kane, yes, I've heard of him. I need to check that out. Check him out. I think I am subscribed to his channel. Someone else may think mention him to me. Okay. He has a YouTube channel where you can learn more about his S&T requirements and how he looks at it. Because I love studying. So, oh my God, $200,000. Whew, that's lovely. One trade. Wow. And if you guys haven't checked out uh, Casper SMC, Jesse Rogers, he did a documentary, or because it was some stuff that came out about him, I know, but I loved it. I like him. He is a good teacher. He explained things. He's the one that helped me understand displacement is your friend. And I need to get back to watching for that displacement. But he's a good teacher. He teaches a lot about how to trade ICTConcepts. He breaks it down for you pretty good. So, yeah, check out his channel, Creator Kane. I want to make sure I'm already subscribed. Is that his YouTube name? Oh, I see him. Okay, no, I wasn't subscribed, but I am now. So thank you. Also, it seems like he doesn't have any. Where does he put his educational material? Is it inside of a paid group or a Discord or something like that? Do you watch him trade live, or are these like recaps or a Discord group? But well worth the money. He's building monsters in the group. Are you in this group as well? All right, it is 11:30. We're gonna see if we get any type of push. Well, well, hey, I don't know much about him. I went to his YouTube page, but I don't see anything, so I don't have anything of my own to um go by as far as what he is capable of doing. But thank you for the information. I'm pretty much set with my model and my trading style. I always try to improve my edge. Thank you for stopping by, Latest Trends. Hope to see you later or tomorrow and have a great day. All right, guys. Well, it is 11:32. We have not broken past this first presented fair value gap again. We're still in this range, so I believe they're going to hold price. I'm going to send out a notification about our stream that will start um, at 1 o'clock. But before we go, please, if you haven't already, please subscribe and like the live stream. If you have any questions, go ahead and put them in the chat. I can answer those real quickly before we head out. We'll take a break for lunch and we'll wait for the market to show its hand about what it would like to do. So, any questions, comments, or concerns? Okay, seeing none. I appreciate each and every last one of you. And thank you for joining us. We will be back this afternoon. Have a great lunch break.